Good morning. This is Larry McMillan with a stock market update on Monday, January 29th. So the market broke out on the 19th and went straight up every day after that until Friday was down just a little bit. So the breakout is very well confirmed and it's strong and it should have support at 4,800 and down really for 100 points below that if it would even pull back that far. So the S&P chart remains positive, and because of that, we still are maintaining our core bullish position. There are some conditions building up, but really right now there's not much in the way of confirmed sell signals. We do have confirmed sell signals from put-call ratios, but they're sort of wavering. The put-call ratios are bumping along the bottom of their charts. If they were to start to accelerate upwards, that would be a much stronger sell signal. Outside of that, we don't have any confirmed sell signals. There's a potential of a couple, one being a McMillan volatility band sell signal, but that would have the market would have to pull back at least 30 or 40 points from here and then close it. After it does that, then we'll have to close even lower again. So that could take some while to set that up, some time to set that up. Breadth has been positive, not, I would say, wonderful, but it's been positive, and so the breadth oscillators are on buy signals. They're in modestly overbought territory, but, that's not a real concern. In fact, when the market is breaking out to new highs, we would actually rather see the breadth oscillators get more overbought. New highs on the New York Stock Exchange have been very strong. 5 of the last 6 days have seen more than 100 new highs each day. And that gives us a buy signal from what we call the new highs versus new lows indicator. So that's a positive thing going for the market there too. Meanwhile, VIX has kept at a low level, and so the trend of VIX is still downwards, and that's bullish for stocks. We might become a little worried if VIX were to close above its 200-day moving average. That's at about 1530 right now, slowly declining. So that's one potential negative to look for, but again, it's not a negative yet. And in fact, this week is a positive seasonal trend because it includes the end of January. And typically institutions that get cash inflows at the beginning of January still have some of that cash left at the end of January and employ it then because they don't want to show too much cash build up on their books. So as a result, that's a positive seasonal for this week only. But altogether, these things add up to a positive bullish market. And I realize that these Januaries that extended into Februaries in the last few years have seen some pretty seriously declining February, so that's always a possibility. The last 2 years, February declines have been, within bounds, and so it's been not a disaster for the stock market. 2020 and 2018 were somewhat disasters for the stock market, so we'll be keeping an eye out for, confirmed sell signals, inversions in the term structure, volatility increasing, that sort of thing. But right now, it's not happening. So we will trade confirmed sell signals around our core bullish position, but as long as S&P is holding above 4,800, there really isn't anything to worry about. So I invite you to visit our website, take a look at some of our newsletters where we cover these things on a daily basis, and meanwhile, have a great week trading.